Live from the Spring Hill Suites in Beaufort, Georgia, it's Tom Kline, and today I want to talk about cyber coverage. So, cyber coverage coming to you right after my introduction. Here it comes. Okay, we are back. So, today I want to talk about cyber coverage. Kind of do a deep dive today. Here in Georgia, I've got had appointments with dealers yesterday, kind of all over South Georgia. Got appointment tomorrow in Stone Mountain. So anyway, having a good time. It's hot as can be here, obviously hot Atlanta, and I'm broadcasting here from my studio kitchen. The best thing about it is my refrigerator's right there and the coffee pot's right behind me. So anyway, we're going to do a deep dive today on cyber coverage because I get a lot of questions about cyber coverage. So I'm going to pick a miscellaneous policy from one of my clients. And in this particular policy, we're just going to go page by page. I'm going to tell you about some of the questions I have, some of the concerns, and the importance, of course, of reading through your insurance policy and understanding what it is you're buying. On this particular policy on page 1, there's a section called Notified Individuals Threshold, and that is like a deductible. And in this case, this policy has a notified individuals threshold of 100 people. And what that means is there must be 100 people affected by any data breach before what's called call center services and credit monitoring are triggered. This particular policy I'm looking at has an endorsement to add it back into the policy. So that would mean that if only 10 people or 20, if the endorsement wasn't there, it would mean that either 10 people or 20 people, if they were breached only, that you wouldn't have any coverage because it's like a deductible. I have several clients who have had this particular policy and they didn't even know that they had a notified individuals threshold. So that's important to know. Second thing on the kind of the declarations page on this policy, it has a waiting period. And some cyber policies have business interruption coverage. And that means that if you have an interruption due to a cyber breach, that you have to wait that many hours before the coverage will kick in. In this particular case, the waiting period is 8 hours. So that's the amount of time that has to pass before the business interruption coverage would kick into place. So the next page is also kind of a declarations page. This particular policy has $1 million in legal, forensic, and public relations or crisis management. So that means that the policy has forensics to determine where the breach came from, public relations, so there are expenses that are designated so that if you have to hire a public relations office in order to deal with all the fallout from the breach, that those expenses are part of the policy. Now, when you're talking about that, some policies include those as a part of the overall policy. So let's say you have $3 million, which is like this policy I'm looking at. You may have legal and forensic and crisis management budget. That $1 million can be part of the 3 million, or it can be a sublimit. And so you have to determine, take a look and see which part of it is. That's important, of course, because you're going to have to hire lawyers and you're going to have to deal with the Federal Trade Commission when you have a breach. If you get fined, typically cyber insurance policies do not have a provision where they would pay any fine that you would have to pay as a result of that. So the next thing is the policy limits of liability. That's the total amount of coverage that you have. In this particular case, they've got $3 million of coverage. Now, 3 million may seem a lot, but let's just do some math. The typical dealership between the CRM and the DMS have usually 200,000 names. 250. You should check. You should know how many names you have. So if there were a breach, and all 200,000 names were breached, then you would need to do a quick math calculation. So if every single person signed up for credit monitoring, which is unlikely, but 200,000 names, credit monitoring is $100 per year. So 200,000 names times $100 per year is $20 million. That's a worst case scenario, is that you'd have to pay $20 million only for the credit monitoring. So you have to ask yourself, how many people do you think would actually sign up for credit monitoring in that case? And what other coverages are you concerned about, like the legal, like the public relations? And then determine what limits there are. Now, one way to keep your premiums down is to insert what's called a retention. A retention is like a deductible. So if you're looking at cyber policies, consider telling your agent that you'd like to see retentions of 10,000, 25,000, 50,000, 75, or 100,000. Whatever you think and whatever you'd be comfortable that you'd have the ability to write a check for that amount. If you had a cyber breach, you'll be able to save some premium. Also, on this particular case, this particular policy has a $15,000 deductible for most of it, but $7,500 for legal expense. So there is a way to play with the deductibles here. This policy in particular that I'm looking at also has a maximum number of notified individuals, but it included in the breach response plan is if the notification, if you have to go over more than 100,000, which is the cap on this particular one, the insured or the dealer can take some of the coverage from that $3 million and use it to handle person number 100,001 up to however many, 300,000. And so they allow you that. But I don't love the way that that policy is structured. Having a maximum number of notified individuals, not all policies are like that. That's not my favorite way to see it. But in this particular case, this is what this dealer has, so this is what we're talking about. Also take a look at the funds transfer fraud. And we're really, I know we're into the nitty-gritty, folks, but this is super important because this, in case you ever have a breach, this will be the policy that pays out if you have a breach. Now, if you don't have a cyber policy and you have questions, of course, always reach out to me. I'll answer the questions. But you really should consider the cyber policy because it's what's going to protect your business if you have a breach. Now, in this case, there is fraudulent funds transfer, say that a couple times, of 250,000. The reason I'm bringing this particular line up is most insurance policies have what's called an other insurance clause, which says that if there's other collectible insurance from another policy, that policy is primary. But if this policy has the funds transfer fraud and your crime policy, which is usually part of your garage policy, also has funds transfer fraud, then you're going to have a situation where both insurance companies are pointing the other one saying, hey, you have the funds transfer fraud coverage, so you're primary and we're excess. So you don't want to get into a situation where that happens. So what you need to do in those cases is have one of the companies say that they are excess. Now, usually I ask the cyber carrier to be excess, and so the primary crime policy would pick up on the funds transfer fraud. But unless you negotiate that, then, and you do have a claim, you may have a problem collecting on that claim. So the next thing is the AM Best rating. So AM Best rating of an insurance company is like determining their health, if you will. And so AM Best is a ratings company. It's an independent company that looks at all insurance companies. A good AM Best rating is somewhere between an A minus, an A plus, or an A plus plus. I'd look very carefully if your cyber carrier or any of your insurance companies, for that matter, had anything less than an A minus. I would consider leaving that and looking at a different policy. Okay, so I had in this particular case, I had a conversation with both the agent and the underwriter because I saw something that made me uncomfortable, and I'm going to read it to you. It's a little, again, it's a little in the nitty gritty, but this is where the important part is. It says it's the breach, excuse me, the breach response, sanction limit, and exclusion clause. No reinsurer shall be deemed to provide cover, and no reinsurer shall be liable to pay any claim or provide any benefit to the extent the provision of such cover, payment of such claim, or provision of such benefit would expose that reinsurer to any sanction, prohibition, or restriction under the United States resolution or the trade or economic sanctions or laws or regulations of the EU. So if by paying, what this says is, if by paying your claim, it opens up liability for this particular insurer that such that they would get fined by the European Union or the United States or the United Kingdom, then they don't have to provide coverage. I said, that's crazy. That's like not having coverage at all. The underwriter is going back and figuring out what that means. Sounds like it means there's no coverage. I'll update you when I find out what that actually means. And so we'll go to another page and one of my other questions. This next one was a very primary concern, and it has a war and civil war exclusion. Now, a civil war exclusion is routine on most policies. It's something you'll see that in the case of civil war that they don't have to pay out. This took it a step further, which made me more uncomfortable. And as we're going through this, you understand that I have a good deal of discomfort on kind of some of the languages that I'm clarifying for one of my dealers on this. But this says that this endorsement modifies insurance provided under the following. And it says for resulting from, directly or indirectly occasioned by, happening through, or in consequence of war, invasion, acts of foreign enemies, or hostilities, whether war be declared or not. What that says is if there are countries that are hostile to the United States and the breach comes out of that country, that they're not going to pay the claim. Now, I said to the underwriter, I said, what about North Korea? What about Russian hackers? What about Iran? What about some of these other countries that are not friendly? They're hostile to the United States. So are you saying that when a breach comes from one of those types of countries that your policy isn't going to pay anything? I said and I said to the underwriter, the days of hackers coming out of somebody's mother's basement are gone. These are now very sophisticated operations. And to say that you're going to exclude coverage in the case that an act of a foreign enemy or hostility, whether war be declared or not, is not okay. That's not acceptable. That's like not having coverage. So in this particular case, this dealer is paying close to $20,000 a year to not have any coverage, in my opinion, if the breach starts in one of those countries. So the next item I have is the computer hardware replacement cost. So again, sometimes these policies are written to be confusing, and um, this particular portion is a computer hardware replacement cost. So if you have to replace part of the hardware as a result of a data breach, then this shows that, provided, however, the maximum sublimit applicable to replace such devices or equipment is $100,000. That's what it says in the policy. My question is that included or not included in the $3 million on the first page? So, and again, the underwriter did not know, and that's important. One final item, we're going to do this in more than one part because this is such nitty-gritty stuff, and I recognize that. Um, there's a endorsement called the contingent bodily injury with sublimit endorsement, um, and it says that the definition is amended to say that bodily injury includes emotional distress that results from physical injury, disease, or death. Then it talks about bodily injury, contingent bodily injury. And contingent bodily injury means those claims where the damages sought by the claimant are for bodily injury which arise out of the security breach. So if there's a security breach affecting the insured's organization's computer systems, which is otherwise covered under the terms of this agreement, but not if the insured's own act, error, or omission is the immediate cause of such claim. So they're saying that if you make a mistake, it's not going to, if you make the mistake and you're the cause of the breach, that they're not going to cover it. Again, I don't understand that. It doesn't make sense to me, and we're going to get more information. Someone's knocking at my door, so we're going to end it here. I'm Tom Kline. Please reach out if you have any questions, and thanks for seeing things from a better vantage point. Take care.